All right, so I think I'm going to get started because we don't want to take everybody right into 9 o'clock, 9:15. The goal every morning
Okay.
is to get to the point where we're pretty focused on offering uh, a bias, for lack of a better way of putting it, on what we think the market's doing, what sectors to be looking at, adding a little bit of fundamental background. And when I say fundamental background, it's not so much reading. Nothing even close to reading financial statements as much as just giving some insight into news and that kind of stuff. So I guess I'm going to start. First, I want to say thank you to everybody who's here. Very, very excited about doing this. I mean, for those of you that don't know, myself and Marion, we both uh, we've had multiple conversations about how excited it is to actually have the opportunity to help people who genuinely want to be helped and want to advance their career. And whether it's full time or part time, it really doesn't make a difference. We've had many conversations between us of wanting to help is really where it all starts. If you really care, you really develop a good sense of community, and that's really the biggest thing that I personally want to make sure that everybody understands right out of the gate. Is we're doing this to develop a community where everybody is okay with feeling comfortable with asking questions, regardless of experience level, and especially if you have more experience. I personally would like to make sure that if you have something to add, absolutely add it in the spirit of helping somebody get further down the trader path. And if you're there a little bit further than them and you see that they are, offer some help in the sense that you're helping them learn something as opposed to making somebody feel like something might uh, not be a smart question or anything like that. We absolutely don't want that, and we want to foster an environment where people are completely comfortable with asking a question so that they could learn to be better tomorrow. And that's really what it's all about. I've been on some really awesome winning teams, and I really would like to see this become that as well, where it word of mouth really spreads that if you get in there, you're absolutely going to get the help you need as long as you participate. That is absolutely, if I ever have one criteria for this room, number one is be respectful of everybody else, but number two is you will get the greatest value out of my help and Marion's help and quite frankly from the community if you participate. And here's the concept of why I feel so strongly about that. You could be 100% convinced you are correct on what a trading strategy is and how to translate that into a game plan, and it could be 100% wrong. And you're so stuck in your own head, and like maybe you read one book or one article or whatever it happens to be. You should participate in order to improve. So if you don't get some questions out of your head to at least get some feedback on it, you're never going to have any kind of context for how to improve. And that is absolutely, in my opinion, if you want to improve, you have to be okay with being naked a little bit and asking a question that it might be out of the blue, it might be really relevant. You don't know until you ask it. So I can't stress enough, the more you participate, the more value you are going to get from myself, from Marion, and from everybody else who hopefully sticks around and participates with us as much as possible. So I'm really excited about that. So I guess Marion, that's like kind of like a hard and fast, nice guideline to have. Participate and you'll get
Right,
more.
I agree. Not only that, but asking questions actually helps us because it helps us to understand where your mindset is. And to be honest with you, we never stop learning either. We can learn things from you guys.
100%, absolutely 100%. I'm sure you feel the same way, but I know myself personally. I am constantly trying to get better. There's no, if you ever feel like you have it 100%, you're wrong. You're about to get ran over. There's no way. You absolutely. I guess we could just touch briefly on what we talked about adapting before. There's adapting to the market conditions versus changing your strategy. I think that's kind of two completely different things. There's certain core things that go into being a good trader, and there's always risk management and developing an edge and that kind of stuff. And the closer you get to developing a strategy you believe in, which is the whole point of what we want to get across here, the easier it is going to learn how to be consistent. You need a consistent way of attacking the market every day because that's where the consistency comes from. And I think a lot of traders don't understand that. They think that day to day the market offers opportunity that, I'm just going to see what happens today. That's not the way to make money consistently. You have to have a certain criteria for what you're looking for in the market, and then look for stocks that match your criteria. It's not the other way around. It's not, well, let me see what the market's doing and then I'll find something to do. You have to go into the market every day saying, I know what I'm looking for. Now let me look for some opportunities that match my edge. Am I explaining that right, Marion?
Right. I agree.
Okay.
And there's certain things that you can do to give yourself that edge. And we're going to try to help you with that. I think first and foremost is looking at what morning news is out, where the market is sitting at this moment.
Okay, what I'm going to do is I'm going to run through this roughly 16 slides. I don't think it's going to take me any more than 5 to 8 minutes. I just want to give us a framework for anybody that may not have a framework, just so they could see how some other people are doing it. And you could use some of it, you could use all of it. It's completely up to you. And then maybe when I'm done, Marion, you could just run through some ideas so that we could start to get a little bit of feedback back and forth. And as we're doing this, if anybody has questions, we have no problem stopping right in the middle of doing it and answering the questions. And as we're moving through, then we'll start to get into some little bit more specific stuff. So if you can just give me 5 minutes, I think we'll be in some pretty good shape here. All right, so the first and foremost is I want to make sure that everybody understands that, this is a game plan meeting, but a game plan is worthless without actually having a strategy in the first place, which means that you absolutely need a trading plan. And to put it in the simplest context, a trading plan is how you ultimately define your edge. So in other words, what do I look at that I can say this happens more often than it doesn't, and then how can I look for opportunities to manage risk in those ideas? You absolutely need to have an edge, a strategy, a trading plan. Trading plan is a little bit more detailed. I would say a strategy is within the full trading plan because the full trading plan has money management. But for the context of what we're going to do in these game plan meetings, it's more looking at strategic ideas or an edge, whether it's just, it could be moving averages, it could be trend lines, it could be interpreting the news, whatever that happens to be for you. It's converting or transforming that edge into opportunities that are available for day traders, especially, into a game plan. All right, so without a clear strategy, and I cannot stress this enough, without a clear strategy for you, and again, you have to take all of your resources into your game plan. This is a very, very big, I don't know if I'd say pet peeve for myself, as much as something you absolutely need to consider. Everybody is coming to the market with different resources. Every one of us in this room right now. Some of us are coming with a lot of experience, which was earned through trading losses and over the years adapting and learning what to do and what not to do, which actually that's probably one of the biggest things I could make sure that if I give you any advice at all, you first have to learn how to not lose money so that you're around long enough to learn how to make money. And that means that you need to absolutely have very strict criteria of when to get involved, actually trade, and then trade more when you start to get performance that shows your strategy has validity and you can follow it. There's two things. One thing to have a strategy, it's another thing to actually follow it. So give yourself a chance in the beginning especially to learn how to trade, to get enough experience to learn how to make money. So you essentially have to make a big list of what not to do. Don't do it. And then focus executing flawlessly on what works for you. So you don't need to do everything. You just need to do well what matches your resources and goals. So again, without a strategy, your performance, I think even mediocre is putting it nice. I think, in my opinion, in my experience, for those of you who don't know, I've managed hundreds and hundreds of traders over the years. I was a prop trader. I'm trading my own account. I had at one point 250 traders working with me. Absolutely 100%. The closer you are to having a strategy that you attack the market with every day, the easier it's going to be to at least put yourself in a position to win. But ultimately, that trading plan boils down to you have a whole bunch of stuff of what not to do. You reduce and ultimately eliminate that stuff from your daily activities, and then you focus 100% on what works for you. Now, there's a tendency for traders to say, well, if I focus only on certain things, then I'm going to be leaving all these other opportunities out there. I'm not going to be able to take advantage of all these other things. Well, let me put it into the context that I feel that works the best. Trading's a business. Most of us come into the business with a certain amount of resources. And in this case, let's actually talk about capital being one of those resources. You would never go out and open a pizzeria, a deli, a clothes shop, and like 5 or 6 or 7 different businesses at the same time with limited capital. Yet for some reason, traders want to go out and trade stocks, options, futures, forex, trade long, short, breakouts, and everything you could possibly think of at the same time without ever having proved that they could run the business. So your strategy will also dictate which stocks you trade and what type of business you run. Keep your business manageable first and then expand as your performance, which in trading terms, that would be your revenue. As your revenue improves, then maybe you can expand your business, but get really, really good at something first before you expand. All right, next, consistency results from that execution and actually following it. I can't stress that enough. Your consistency comes from your plan, not from the market, and from following that plan. All right, what type of workflow? This is a general outline of what everybody will normally be doing on a day-to-day basis, starting in the top left-hand corner. Generally speaking, and again, we're talking about trading. We're not talking about investing, so we're not looking at, we are going to be looking at earnings, absolutely, but we're not going to ever be saying, I'm in the trade because I like the stock. If you're ever trading and saying, I like the stock, and you kind of have like a gut feeling, that's an investment. We're talking as a trader of where we think the stock is going over the most recent price action, the most recent however many days, whether you're a day trader or a swing trader. I would say, generally speaking, most of the trades we're probably going to be talking about here, let's say intraday to 5 days, that kind of window, maybe 10 at the very most. And we'll make a distinction between day trades and swing trades, but there always has to be some sort of top-down analysis. And in my experience, this format here is, generally speaking, the way to really clean up what is the structure from top to bottom that I look at. It starts out with looking at the last month or the last quarter of when a stock reported. And again, generally speaking, from a strategic perspective, a company will report today, and those earnings will carry them through till the next quarter when something comes out. So generally, the order flow in that stock will carry through to the next earnings season. And Marion, that's kind of a very general statement, but is that safe to say?
Yeah, I would definitely say so. And that's why certain reports within an earnings report are more important than others, because it has to carry them through for the next 3 months. I actually do think it does need to. So we'll go over that, what to look for in the earnings reports that will carry you as a trader in that stock. That's in the back of the trading mind of what the general consensus is for that stock. So I think that's really fair to say. That's great.
Okay, excellent. So then from within the time frames that you're looking for, again, you always have to have criteria. Then you work towards the market. You want to always have a bias in the market. I think William O'Neill said it in his book, How to Make Money in Stocks. 38% of a stock's move is relative to the market. So if the market's really obvious, then what that translates into a trade is you can expect a little more juice if the market, the sector, and your stock are all in sync. So that affects trade expectation. Maybe you'll be a little bit more aggressive with share size. Maybe you'll be a little bit more aggressive with how long you hold the trade. Maybe you'll be a little bit more aggressive with how many different stocks you have at the same time. So one thing that's very underutilized by a lot of traders is developing the skill of trade expectation. And every trade, I know Lou and I had a couple of conversations about this on the blog. Whether or not you risk the same dollar amount per every trade, every single trade doesn't have the same expectation for follow-through. I mean, there's just certain situations where it's a better idea. There's more room to go in the trade where the profit potential is better. Maybe there's a really manageable risk point. Take, for example, let's just use the example of Monsanto, Potash, and Mosaic. So let's just use those 3 stocks, for example. If all 3 of them are doing exactly the same thing and the order flow is very clear from 3 months to a month to the last week, there's money, there's order flow going into that stock. You have a little bit more comfort or conviction in there versus, let's say, they're all doing 3 different things. One's going up, one's going down, one's doing nothing. There's an expectation there. So you start with the market, go down to the general sectors, go down to the industries and subgroups, and then the best way to trade going back 100 years is to look for the leaders in those subgroups. You get a lot of people that are like, I want to trade a $2 stock because I can get a lot of shares of it. That's not a trading plan. That's saying you have a certain amount of money in your trading account, and whatever I can buy, that's what I'm going to do, just because of the dollar amount of the stock. It is generally regarded as the classical way to trade is to look for the leaders in the best industries that are trading with the market. There's no other way to put it. And we could debate that till tomorrow, but that seems to be the general consensus, and I agree with it. Why would you trade the laggards when the leaders are doing what they're supposed to if the market's trading well? I just don't see any other reason to. You feel the same way, Marion?
And the leaders will have more liquidity in them, and that's what you're really looking for. It's great to get in, but you need to get out of the trade too. So the liquidity is going to make a huge difference, and your leaders will have the higher volume, more liquidity.
Yep, so I actually touch on liquidity in a couple of slides. So it's actually very, very good. So generally speaking, again, these are the market ETFs that I look at. And again, I always want to talk about. Generally speaking, I'm going to use what's free. So in other words, I wouldn't ask somebody to go and pay for futures quotes. If you want to, 100%, that's on you. I'm not saying don't do it or not. So everybody can have access to ETF charts. You can use freestockcharts.com, whatever it is that you want to use. Yes, you can use the futures or whatever it happens to be. Maybe you can make a debate on whether or not one's faster than the other. But generally speaking, we're going to be talking about what is the overall picture. And this is where I start. So the spiders, the diamonds, the Qs, the Russell 2000, the transports, and the SOX, and then I work my way down from there. All right, whether or not you have a worksheet or not, this is an example of what I usually use on a daily basis. I look for buying pressure over week to date, month to date, and I start to develop a bias. Now, one thing I want to point out to everybody that is extremely important for game planning, the previous slide we talked about the sectors or major ETFs. You will get a feeling, and I hate to use that word, but it's absolutely or a sense of what's going on in the market much better by looking at a lot of stocks as opposed to just saying, well, the Dow's going up today or the Dow's going down today. Do you get that same experience, Marion? I know that when I look at more stocks, I'm like, well, I notice more when I'm seeing a whole bunch of individual stocks.
Right. So I think and there'll be certain stocks that when Pete talks about having a feeling, there are certain stocks that you get to know, and you get to know how they react.
Yeah, actually, that's a huge part of it. So I'm going to, when you talk about which stocks to trade, there's various ways of doing it, where you can scan everything and then look for something, or you can stick with a universe that you trade all the time. And more often than not, especially for active traders, when you know the stocks better, it's easier to have conviction because you know how the stock trades.
Right, exactly. They all have, for want of a better word, personalities. And when you get to know their personalities, it becomes clear what they're going to do. One of my favorites is Under Armour, and it so often will do exactly not what the market's telling it to do, but what the stock does itself. So it's really important to get to know some stocks also.
Yeah, that gets back to the mindset also, Marion, that
right.
A lot of people will say, well, if I'm limiting the amount of stocks because I have to learn the personalities, I'm going to limit the opportunities. But really, the bottom line is you're learning how to trade first. You shouldn't be focused on stuff that you can't handle or don't know until you actually understand how to run the business. So I think the mindset from the beginning is a very, very big thing to keep in mind.
And not only that, but a lot of these stocks are active more often than they're not. So they will go into, their consolidation periods, but then some of your other stocks will be active. So they do tend to be ones that have more volume and more activity, more liquidity in them. You're not going to be looking at the little guy. They'll be the bigger stocks, the more well-known ones.
I agree. Bob's saying my screen is a little bit blurry. I'm still trying to figure out the resolution that will work best for this, Bob. So maybe by tomorrow or a little bit, we'll have that worked out.
I'm good on my screen. Is anybody else having a problem with the blurriness?
Sometimes when you have these bigger monitors, you have to figure out exactly what the right resolution is there. All right, so this screen here is just a second version of breaking it down into a little bit more detail. I happen to have 5 or 10% of how strong or weak a sector or stock is, whatever happens. But really the bottom part to me is the most important. Which stocks do you want to be long today? Which stocks do you want to be short today? And any game plan comments. Very, very important to actually write what you expect to have happen during the day. If you go into the day just waiting to see what happens and then you're going to react, it's going to be passive investing, passive trading all day. So it's very, very important for you to say, what do I expect to have happen today? And here's the thing. If you game plan 10 stocks and 2 of them do exactly what you thought they were going to do, that's all you need. You don't need every stock to do exactly what you said they were going to do. You only need a couple of them. So be very, very clear about what you expect to have happen during the day. As far as economic numbers, I got a few emails about people trying to figure out exactly where they should be looking at it. This, to me, is probably the number one. You can go to Yahoo Finance or Forex Factory, either one. I just wanted to give everybody a little structure, for lack of a better way of putting it. This seems to be one that has everything and probably a little bit more detail than Yahoo Finance. Marion, we're going to pull up Marion's blog post and page, and I'll point out really quick how she has a whole bunch of really cool posts that you could use there every morning as well, as far as just clicking through and finding some stuff to read. As far as earnings, again, you could either use Yahoo Finance or CNBC. If anybody has something else that they use that they find just as good, if not better, just let us know.
NASDAQ has also the NASDAQ.com.
NASDAQ.com?
Yeah.
Okay, cool. The one thing I do want to point out, though, is no matter what service or website you use to ultimately look up earnings, you absolutely still need a filter so you balance your liquidity with opportunity. So out of all, just to give you an example, I used FinViz here. Out of all of the stocks on Wall Street that are reporting earnings today, so essentially I have this here, only 29 of them average at least 1 million shares per day. So I think it's very, very important that you add the liquidity factor to let you know that there is actually institutional activity in the stock that you could manage your downside. Okay, so if you're trading stocks that have less liquidity, just remember that that might make it more difficult to get out of, especially if you're trading size.
And a lot of times the little guys will ramp up the volume into earnings and right at earnings, but it'll dry up extremely quickly, and then you'll be stuck with the stock and not being able to get out. So you have to be really careful with that. In my morning news report, you'll see that I don't always report all of the earnings, and that's really the main reason why I don't. I'm looking for the stocks with the most liquidity in them, the ones that maybe over 1 million shares or just under. So that's why there's only there's just a select few there.
Okay, and also whether you're swing trading or day trading, that's going to be a big difference too. If you're swing trading and getting out immediately is not really as important, and maybe you can work the order over a couple of days and have limit orders, maybe you can go a little bit thinner than that, but especially if you're inexperienced, I personally don't recommend going where the liquidity is tough, because as Marion said, it's going to be difficult to get out within a reasonable area.
And you don't want to take a great winning trade and have it be a losing trade because you can't get out, and no one's willing to meet you halfway between the bid and the offer.
Yep, exactly. Lou mentioned Briefing.com too. That's actually a really good site as well. Lou, do they still have a free section plus the paid? I haven't used that one in a while. That was actually really popular, like back in the day when it was one of the first ones out there. They were kind of like the foundation one.
Right.
This is Marion's post from today. This is actually what she was mentioning. What I want to point out is the resources on the right-hand side. There is a phenomenal list there of probably over 20 different places to start with your research in the morning to at least get a really good feel of what's going on in the market during the day. Just as a little tip, a lot of people don't know when these are all actually website links. So if you click on each one of those links, it'll take you to that page. If you don't use browsing tabs, I highly recommend what you do is you start to use them, and you basically, let's say for example Reuters.com, you right click that and then open in a new tab, so you're opening new windows without closing this one. It's so much easier than going backspace, hitting back window. It's easier to open tabs and have the original window open, so you're not constantly going back and forth. Just a little surfing tip there. But these are at least 20, Marion, I think?
I think there's closer to 30 or 35 there.
Okay, cool.
I tried to limit them, but I was having a hard time.
Oh, that's all right.
A lot of news out there and a lot of great places to get news.
Excellent. So if you haven't started reading this post every morning, I'd highly recommend it. A lot of time goes into it by Marion, and you'll get an idea of her insight in just a minute when I'm done here. All right, so basically two methods to game plan: pure technical analysis, and I kind of wrote facetiously here, but really not facetiously. You don't want news. In my personal trading world, I just want clean charts. I don't want anything getting in the way. I don't want anything surprising me. I just want to trade what's going on in the charts. Some people don't want that. Some people want something to pop out and that kind of thing. these are things you actually need to think through. I always joked around, when I'm trading, and I don't want anything coming out. I just want the charts, and I want clean price action, pure technical analysis. All right. Then there's also news catalyst or stocks in play. Advice for new traders, and again, I actually want to put a qualifier on this. A lot of people, I'm not a new trader. I've been trading for 5 years. Well, I'm going to tell you, if you're not making money, you're still a new trader. That might be a little harsh to hear at 8:30 in the morning, but to succeed as a trader, you have to be honest about where you are. And our goal together is, I'm not saying admit it to the crowd, but definitely take in stride what you actually need to learn that can help you improve tomorrow. So in my opinion, my advice for a new trader, trading the news is challenging, and it's massively different from trading technically off the markets. It is a very different skill to interpret the news, say, oh, earnings came out, or Apple's reporting, and that kind of stuff. If you don't know how to do it, I would let the dust settle on a news play and then trade it technically. I feel that that's a conservative way for a new trader who needs to still earn their keep in the market to understand how to trade. Is that too conservative, Marion?
Well, maybe I would say a combination of the technical analysis and the news. The news can give you a spot to look to where you might find a play for the day, and then you look at the technical. You just don't buy it because 10 people gave it an upgrade. You have to go to the technical analysis and see where the breakout point is. You don't want to buy it before it breaks out, because it just could keep banging against the top and have a false break, get turned down from that spot. So I think maybe a combination of both of them. The news can point you in a direction. The technical tells you where to get in and where to get out.
Yep, that's kind of what I put in the last part here. So
okay. So I'm ahead of you there.
No, that's okay. That's okay. Yeah, no, I'm actually glad that we agree, because there's a lot of stuff we didn't discuss. We didn't, I think that you could definitely use it. And something that you had just mentioned there briefly, Marion, which I think is very important, is putting the news in the context of where it's trading technically is very important. Like if a stock is up 8 days in a row and then it reports good earnings, buying that higher opening is probably not a great idea.
Right, exactly, because that's already in the market. People have expected that. It's like Apple today. The whisper number is actually higher than what the expectation is. So it's going to have to be the whisper number, which is the number that people really believe is going to be the EPS number. So those are kind of things you have to.
We got a couple of questions about who Marion is. So let me just finish up here, and then Marion can just give a quick introduction for herself. I don't want to speak out of turn for her. All right. So this does not mean you should not know the news. Obviously, you should know the news. It's simply good trading to be aware of the news and how it might affect your game plan. So kind of putting all of that in context there.
Right.
All right, so example of news affecting trading. Again, this is my personal trading. I am not telling you to do this or not do this. I am telling you what's in my strategy based on being a full-time day trader for a long time. Now, this might shock you. You might completely disagree with you. I don't care. This is how I trade, okay? I just want to give you an idea of what could potentially spur in your trading plan. Well, I lose money doing that all the time, so I'm not doing that anymore. And that's what ultimately why these two things are in my trading plan. All right, number one is I do not trade FOMC days. And number two, I don't trade options expiration. For me personally, over my trading career, looking at my P&L and going over my trading journal, almost every one of these days that I trade, I feel like I'm guessing. I feel option expiration could end up anywhere during the day, and I feel FOMC is a complete guess, in my opinion. So in my game plan, I golf.
I actually have to agree with Pete on FOMC days, because nobody knows the news that's going to come out, and there's wild swings in the market that day, and it's really hard to catch a wild swing successfully all the time. And even if you just do it because it swings so wildly, you can lose a lot of money really quickly.
Yep, I just felt like when looking at my P&L, you always want to be in control of your ideas. There's a saying that I have with everybody is you always want to lose money on your best ideas no matter what. And I got to a point where I'm like, you know what? That's not my best idea. So to me, it just wasn't the potential reward if you guessed right which is, in my opinion, what you're doing on those days, it just wasn't worth the risk because you had no control over the trade. And again, I'm not saying you should do this or shouldn't do it. I'm giving you a little context into why I don't, and the thought process that went into me putting in my game plan and saying, don't take risk on those days you don't feel like you have control. And that's just what I do. So just to give you guys a little bit of an idea. And the day of an earnings announcement, I will flat out tell you, I am not the greatest fundamental analyst on the planet. So I recognize my weaknesses, and I don't put myself in a position to do something I'm not good at. That doesn't mean I don't trade it. I just, the first slide we talked about, quarter to quarter with earnings, I am more likely to let the dust settle and then take advantage of the earnings, but not necessarily trade it during the day of the earnings, which also means I reduce my size heading into earnings if I'm holding something. So
I tend not to hold, I don't hold stock into earnings, but I have to say that I will have some option plays, spreads. I will not take naked calls or naked puts into options, into earnings, but I will do spreads, straddles, strangles. Into, like today I'll look for, but I will go by price. I'm not just going to say I want to have something going into Apple earnings, so I'm going to buy anything and I don't care where the price is. Price is a huge consideration. I will not do anything today if I'm not going to get a good price on it.
When you say price, Mary, you're talking about purchasing?
The purchase price of the spread. The purchase price of the straddle, the strangle, the spread that I'm doing. Sometimes I'll try to leg in and out of them, which means you buy one side, you trade one side first, and then wait. If you see a direction in the market, if it looks like Apple is, if I believe Apple is going up, then I can buy one side, let's say, of a spread, and then sell the other side as it goes up. But I will not. I want to have a good price too, because it doesn't make sense to buy anything into earnings that you've paid way up for. I guess that's true in anything. You don't want to really overpay for anything, but more particularly in earnings, because options can be way overpriced going into options, particularly something like Apple that has great volatility, after earnings.
Yep. And I think what you had mentioned there is very, very important, Marion, is that option trading is a completely different animal from straight out equity trading.
Yeah, it really is. So we can get into that at another time.
Yep. The price of options doesn't stay static. And there's time to expiration and volatility and a whole bunch of other things. So you might be purchasing an option for a certain dollar amount you want to spend, but that doesn't necessarily mean at all that it's cheap.
Right, exactly. And we can, I'm sure in time we'll go over different option strategies, particularly different option strategies into earnings. I think there's some that are better, for an earnings play than others.
Yep.
I think we have some questions here too. Oh, I see there. Okay.
Ken, do you take any days off during the week? For a long time, Friday afternoons in the summer, that was kind of like a given. Everybody was going to take off. I'm not so sure it's hard and fast rules it used to be, but absolutely certain days when you just feel like there's nothing going on, you start to see maybe the market contracting a bit. But I don't have as hard a fast a rule as I used to. I guess maybe as I'm getting a little bit older, I'm just coming to work every day, and if there's money to be made, I make it, but I don't take days off as much as I used to.
And also, there will be days when you say, I can't see anything, or else I'm not seeing anything clearly. Those are actually days to leave.
Yeah, look.
You're going to make a mistake because you're going to sit there and you're going to want to do something, but you can't see anything clearly. So I say get out and have a good time, go play golf or something.
There's a quote that my old mentor used to say. He said, if it's hard to find, it's not there.
Right,
and
right.
It's so true. It's so true. All right, I'm just going to put about a couple of more slides up here, then we can finish up. Only 2 more slides here. Every single thing we do with putting stuff into our game plan, there's always a balancing act. Again, based on your resources, that's a given. What's your experience, what's your capital, what's your risk tolerance, all of that kind of stuff. However, there's always a balancing act between liquidity, which is managing risk, and volatility, which is managing opportunity. You must find a happy medium for yourself of how much you're comfortable with the stock fluctuating in exchange for how much risk. And there's nobody could ever give you that, because everybody's coming to the market with different baggage, different risk tolerance, and all of those kind of things. So you don't want to trade stocks that you necessarily won't lose that much money in, because then you won't actually make any money either. So there's a fine line that you ultimately have to learn yourself over which of the two you want, which is more important and where you are at certain points in your career. I say career relative. If you have money in the market, it's a career as a trader. I don't care if you're trading full-time or not. You're still taking risk. All right, so just as a general number, this is no hard and fast rule, but I think it's definitely a window for people to start out with. Average volume per day of at least 1 million shares to show that there's some institutional activity. Average true range of $1.50. If you're not sure what true range is, it's essentially the average from low to high over a certain amount of period. Most softwares default to 14 days. So it's the 14-day average of $1.50 from low to high. Just to give you general guidelines. You could tweak it however you want, but I think those are pretty conservative numbers to start out with. Scanning considerations. This is actually a pretty big deal. You can scan every stock in the market looking for patterns and opportunity, or you can review the market bias and trade only stocks in the leading sector. So that's actually refining the scan a little bit more. So instead of looking at everything, you might say, all right, I want to be long today or I want to be short. Now let me go to the sectors that are trading with the market and then only trade the market, the sector leaders in those markets. So you're going to let everything else go, and maybe that'll filter down to 8 stocks, just for argument's sake, and then only those 8 stocks you're going to trade. Or you scan a consistent universe looking for patterns. So in other words, and this is actually very, very popular for day traders, where you'll trade the same stocks over and over and over and over again until you just, maybe they change price points or whatnot. But this is, in my opinion, this is one of the ways that most traders should start out, where Marionette actually said it before. You start to learn the personality of the stocks, and it just becomes immensely easier to have conviction because you have a certain familiarity with how the stock trades. All right, and last, we have patterns and opportunity scan for must be viewed through the filter of your strategy. So I kind of touched on this at the very beginning. First, you have your strategy, and then you look for opportunity. You don't find ideas and then say, well, now let me figure out how I'm going to trade it. It doesn't work that way. It's always first strategic. And then last but not least, is it a good long? Is it a good long now? That's not the same thing. Absolutely not the same thing. You could definitely want to be long. Like, take, for example, the market now. It's clearly a long, but at what point do you say, well, it's stretched a little bit, or, you know, I mean, the market itself probably isn't. We kind of got this nice big ascending wedge right now that's sitting on the precipice. So what has the price action done in the last 3 to 5 days for an active trader? I would say that this is a pretty clean way of judging day trading into swing trading. What are the odds of follow through? So in other words, if it's day 4 where the stock is well bid, meaning higher highs and higher lows for 4 or 5 days in a row, and you get a higher opening, what are the odds of following through the next day? Not usually great. Again, expectation for follow through gets a little bit weaker the more consecutive days in a row. Is that 100% fact? No. You get algorithms right now that could just, bids compile on top of each other and keep running in that direction. However, we are trading for what happens most of the time. We're not trading for an outlier that can happen once in a lifetime. Okay, you got to make that clear. All right, so is it an inside day? You know, we had a trade in American Express a couple of days ago where there was an inside week, inside day, and we made a point in the Facebook group to say that we're expecting an increase in volatility based on these 2 inside days in a row. And it's Larry Williams, probably one of the best trading educators, has been around for a really long time, said the only 2 cycles you need to know is volatility leads to contraction, contraction leads to volatility. I agree 100%. Set up on the chart perfectly. 2 inside days in a row led to a almost $2 trend day the next day. We didn't pick direction. What we picked was volatility. We picked that we expected to have an increase in volatility.
And then the market will tell you, though, direction.
Yep, exactly. I like to say let it tip its hand first.
Right.
And here's basically what I'm talking about as far as the last 3 to 5 days in Time Warner over the last month or so. So you can literally see here 4 days down and then quite a few days in a row to the upside. Now, what's interesting, well bid in my vernacular here is when you get higher highs and higher lows. And the more consecutive well bid or well offered a stock is, the closer you start to get to 4 to 6 days, you get a contraction in volatility. And then ultimately, we had a nice move in the opposite direction. But this is a pattern that plays itself out. So as you get up to day 4, what are the odds of follow through the next day? And you can see we actually opened lower, but barely got out of the previous day. Then we had an inside day, good candle there, leading to a trend day. And then 3 more days and then contraction. So I pulled up this chart because this is, in my opinion, a really good illustration of this 3 to 5 day window, and what are the odds for follow through. So as you get towards day 3, 4, 5, and 6, the odds of follow through decrease. So if you get a push down like this and then you get a lower opening the next day, the odds of following through and pushing down, barring news or an outlier, the odds of follow through diminish as you start to get towards 4 to 6 days. So again, a good guideline. Okay. All right, Marion, that's actually what I have for the beginning. I don't know if you want to take over the screen and show a couple of things, or even just I could leave this up and we could have a discussion if you want.
Well, should we answer some questions first?
Yeah, absolutely. Absolutely.
So let's go through what people are.
I'm actually just going to.
2000 with Volume Buzz, saw it with Harry Boxer on trial. Oh, that's TC 2000 is, I guess, something that you purchase.
I think TC 2000 is a scanning software, if I'm not mistaken.
Oh, okay. I don't know all the scanning. I guess you get stuck with like one and you stay with that. Bob, I was on the floor. I started out on the CBOE in 1979. Then I moved to the New York Futures Exchange floor where I ran operations. After that, I was on the New York Stock Exchange floor behind the digital equipment specialist. After that, I moved on to Goldman Sachs where I was their overnight analyst. And then I left everything to trade for myself. So,
Marion, who is the specialist in
GEC? Let's see what we have. Oftentimes, buy the rumor, sell the news. So true, Lou. A lot of times don't jump into the rumor before, when if it's been out there for a while, because let's see, okay, take off during the week. Oh, we answered that one. Charting platform. Okay, great. I just wanted to go over a few things on the, actually, Pete, can you put up my blog? Do you have it right there?
Yep, absolutely. Let me just pull up that screen.
I really think it's important when you come into the market in the morning that you're not coming in at 9:15 saying, okay, let me see what's going to happen today. Because if you're looking to see what's happened, it's going to happen in front of you. And you're not going to be able to be there to know where the breakout points are in the stock. And what I do here in the morning report is to give you kind of an idea of, first of all, what happened overnight, so it can give us a clue as to what our market is going to look like in the day and what is behind, what's shadowing our market. Because European and Asian markets are going to have a shadow on our market, no matter what has happened. And so I give you a little background to the moves overnight. And then I bring out news, because a lot of times stocks that you either might be in or looking at, news will make a difference. Technical analysis is extremely important because it's going to give you the breakout points. It's going to give you support and resistance. That's what you need to trade. But to give you a look within the market of where there's a great possibility of movement in the day, the momentum in the day, are some of these stocks that have big news out on them and big upgrades and downgrades. I look at other things. There's option activity, and the option activity on Friday was telling me that JD, Disney, Google, and Twitter all had insane option activity. Those are the four highest. Now, all of a sudden this morning, we get news out on all four of those. Those have a great possibility of having a lot of momentum news on them, on a move on their news. So you can't just do it on the news. You've got to look to see where the breakout points are, because they can go right up to resistance and come screaming down. So I like to trade with a combination of the news and the technical. If you're a day trader, the fundamental news isn't going to be as important. The fundamental analysis isn't going to be important. That's more for your swing trader, your long-term trader, your dividend player, and also earnings. I try to let you know what guidance is on earnings, because what's happened, what they're reporting, will make a difference. But that's what has happened last quarter. What you need to know and what investors want to know is what they think is going to happen starting today, this quarter. And that's your guidance. Now, if you see CYOU, Chinese stock, the guidance, it misses. So in other words, they don't think it's going to be as strong. So even if they can beat their EPS and their revenue, they're saying we're not going to do so well next quarter. It makes a huge difference. You've got to know that. The second thing you have to know when you're trading an earnings play is what time the conference call is. If you don't want to listen to it, that's fine, but you have to be aware that news can come out in the conference call. It happened last week with Yahoo. The stock was down like $2.50. Marissa Mayer came out. She had news. Within seconds, it reversed, and all of a sudden, we were up $2. How do you quickly find option activity? It's not, you can't quickly find it. What I did was I scanned for it after the market closed, and I saw the option activity. Sometimes you can tell if a huge block trades on stocks you're watching, but it's that activity. You have to kind of sometimes do your homework, and that's a homework that was at work I did over the weekend to find out, because there's a reason there's option activity, a huge increase in it. So those four had increased option activity, and there were also stocks that have liquidity. Right away, I take out of my picture any stock that doesn't have liquidity in. I don't want to be day trading something I can't get out of, because I don't care what great price I got in on it. If I can't get out on it, I'm wasting my time. So everything I do, and even all of the upgrades and downgrades you'll see every day, I'm not going to give you all of them. It would be pages long. It would be 30 pages long if I told you every bit of news and every bit of, ratings analysis. What I'm trying to do is filter out the stocks that I believe have the greatest potential to see some type of move that day. And that's why it's only a page long. I like to keep it under 800 words. Of course, it's kind of hard when there's a lot of earnings plays coming out. But that's why you only see a certain number of them. Those are the ones that I think have, the greatest potential for having a winning trade on the day. And it's both ways, downgrades and upgrades. And again, you have to look to see where, and then after that you look up, you do some charting. I have the charting done beforehand, and I know, what like an inside day, I'll be more likely to put something up with it's had a couple of inside days even, because that's going to give you a great potential to move outside of that little box it's in. I call it a little box when you've got a consolidation. It's going to move out of that box at some point. You're looking for the news that pushes it out one way or the other.
Mary, just to give everybody a little bit of context, how many hours would you say you put into putting this page up?
In the morning?
Mm-hmm.
On a really busy earnings day, I'm up at 5 o'clock. And then the latest I'll ever start is usually 5:30, 5:45, and then you'll see I'm usually done by 9. But it takes, and I've done a little bit of homework over the weekend. Like yesterday, I put up. Right, Lou says this: if you see too much, it can be a liability. There's something that's called information overload when you're trading. You get paralyzed because you have all these stocks, all these upgrades, all these downgrades, all this news, and you can't possibly follow 500 stocks. I can't do it. So you start to filter out what makes the most sense. Do I miss stocks? Sure. But I also find a lot of really great trades, and that's all I need. I only need a couple of great trades for the day.
Yep. I think the point that I wanted to make, Marion, is that I want to make sure everybody understands that there's hours worth of research that gets to the stocks that are actually filtered on this page. This isn't just a regurgitation of news. This is actually trading opportunities.
Right. And that's actually, I guess that's a better word for it. These are the opportunities. These are the stocks I think have opportunity today.
Yep. I think the untrained eye could look at that and be like, oh, yeah, whatever, I can find all that in Yahoo Finance. No, that's not the case. This is all of the aggregation of what she believes are the best opportunities for the day. So I just want everybody to understand how incredibly valuable this blog post is, which the fact that it's a free blog post is pretty cool. What else? Anybody have any questions? I don't want to take everybody too late into the first morning. I just wanted to make sure we all had a really solid introduction to each other. And tomorrow morning, we will get into a lot more specificity on charting and whatnot. Does anybody have anything in particular they'd like to maybe look at real quick this morning? Completely up to you guys. If not, we can call it a morning so everybody can get ready for the day.
Right. And if anything wasn't clear, just, ask us to clarify some of what we do or why we do or how we do it.
Yep. The reasons why are, in my opinion, more important than the result, because
Right.
the better you have the reason why and you understand it and believe in executing it, the results come from that. Okay, so I guess what I'm going to do, Marion, if you don't mind, I'm going to end the meeting with our meeting mandate, which is the more you participate and the more you completely understand that this is a spirit of everybody helping each other, the more value you're going to get out of the meeting. So today I think it was a good introduction to everybody. Everybody got a little bit of an idea of what's going on. Hopefully as we move forward and everybody starts to trust each other, we'll get a lot of participation from everybody. So I guess we'll call it a morning because we will let everybody start to get, it's almost 9 o'clock already. We'll let everybody get into what they are taking care of for the day. We have Apple earnings today, which obviously 99% of Wall Street will be watching.
Right.
Not 100, quite honestly. And we'll take it into the day. So I'm pretty psyched to be working with everybody every day. And if you have any questions at all that you'd like to see us address, I'm not sure how I'm going to do it yet, if I want everybody to email me or if I'm going to put up a specific page for it. I think maybe what I'll do, maybe what we'll do is at the bottom of Marion's daily post, we'll aggregate comments for the next day to discuss. How about that? Maybe I'll put it out an email for that. That'd be kind of cool. This way it's in the same place every single morning. I will aggregate everything, and then we'll discuss that first thing in the morning to go over what everybody wants to talk about first.
We're open to answering any questions you have, even if something we haven't addressed that you think we should be addressing, that would be helpful to you. We're open to that. We're good with that.
Absolutely. Absolutely. We're 100% spirit of let's all learn together. I can't stress that enough. So hopefully everybody really internalizes that and believes us and trusts us enough to ask any question that they feel is relevant, personal to their own trading. So we're going to call it a day today, everybody. We'll see you again tomorrow at 8 o'clock.
Everyone.
Excellent job today, everybody. Have a great afternoon.
Bye.
Bye-bye.